Hello and welcome to Wealthion. I'm your host, Andrew Brill. As Bitcoin continues to inch higher, many of you have asked what is and how to invest in crypto. So we've decided to put together a Crypto 101, if you will, to explain what crypto is all about. And we'll discuss that right now. I'd like to welcome in a person who is very familiar with Wealthion. He's the host of Speak Up right here on this channel. He's also the founder and managing partner of SkyBridge Capital and the founder and chairman of SALT, which is a global thought leadership forum and venture studio. Anthony, welcome to Wealthion as a guest and not a host.
Well, I love it. Okay. And, what I love about you is you are in a house of pain like me every year. Okay. And let me just let viewers and listeners know, you know what the best thing about being a Mets fan is? The months of November to February, Andrew. The months of November to February. I mean, it's brutal.
The optimistic months.
Exactly. The optimistic months when they're tied for first place.
Yes.
It's always great to be on with you.
Winning the offseason doesn't exactly translate, but we'll take it at some point, Anthony, a lot of our viewers have been questioning since Bitcoin has gone from, 43,000 back in January to now over 70,000. What is crypto? We've heard a lot about Bitcoin. We know there's other coins out there. You have this wonderful book, The Sweet Life with Bitcoin, and I have thumbed through it and read it, and it's fascinating. But we wanted to give our viewers an overview of crypto, what it is, how it works. I know that when Satoshi Nakamoto wrote that paper, if he's even a real person, or as you say in the book, it could be three people, it was a peer-to-peer platform where people could exchange things for value. And cryptocurrency was supposed to be that. Is cryptocurrency actually a currency?
Okay. So this is a fantastic discussion. I really do appreciate you bringing me on, but I'm going to go way down to the base layers and provide some historical context so that people can understand why I'm in it. Okay, in 2012, someone introduced me to Bitcoin. I think these coins were trading south of $100. Maybe they were $150, something like that. I listened to the presentation and then I put out a tweet. Bitcoin is nonsense. Caveat emptor. So I just giving you a sense for how unknowledgeable I was and how skeptical I was. And remember, Andrew, I've been in traditional finance for 36 years. And so at that time, it was 26 years. And I thought that this was ridiculous. How could a chain of numbers and letters, a cryptograph on the internet be worth anything? How could that even be possible? And then I'm going to fast forward you to 2014, where the Winklevosses came to see me at the SALT conference. You mentioned our conference. They made this wonderful presentation about Bitcoin, and it was eye-opening to me. And we're going to get into that presentation in a second. They came off stage and said, well, what do you think now? I said, well, look, it's an interesting, compelling presentation. My clients will never buy it. They'll be afraid of it. I'm an institutional investor. I can't, under any circumstances, buy this. Bitcoin is at $300. And then a very fateful thing happened to me. I was in the White House, and this happened to me on a Wednesday. And the reason I know that, Andrew, I was only there for one Wednesday, so I know it was a Wednesday. And these two Fed guys came in to see me, and they wanted to talk about the digitization of the US dollar. I said, the digitization of the US dollar? I said, yes, on the blockchain. On the blockchain? I mean, this is like Bitcoin? Yes, well, it would be a different blockchain than Bitcoin, but yes, it would be on the blockchain. And then I said to myself, okay, I am really missing the boat. This is a new technology. This is something that we're going to be using, and I really got to get up to speed. Well, shortly thereafter, I'm fired. I leave the White House, and then I buy the URL skybridgebitcoin.com. And I spend 2 years researching and studying Bitcoin, meeting with people, read the Nakamoto white paper, met with computer programmers, met with people that were already in the business. And Andrew, still, I did not buy a Bitcoin. Why did I not buy a Bitcoin? Because I'm an institutional investor for high net worth clients and institutions, and I was afraid. I was like, okay, this could knock me out of business if this is wrong. It's extremely volatile, and people don't understand it. And then I started reading about technological adoption curves. I started reading about the people who were in horse and buggies and they did not want horseless carriages. I started reading about the people that were tapping out Morse code and they really didn't understand this device where they could talk through it. And people that thought radio was bunkum. And then they thought, okay, well, TV is bunkum. And who the hell would watch a motion picture with sound? Why would these talkies work? And you go through life and you see that there's a resistance to new technology. Then there's an adoption, then there's an acceptance, and then there's a scaling of it. And so, what is Bitcoin? What is the blockchain? What are cryptocurrencies? And so, put very, very simply, we have figured out a way using a network of computers to verify transactions. And so, right now, if I'm going to buy your house or that studio, you and I are going to negotiate a price. People in general, Andrew, they don't like or trust each other. So what ends up happening is we get a price. You say, okay, this is my corresponding bank. Here's the wiring instructions for my account at my bank. I then take money from my bank account and I wire it to your bank account. Your bank notifies you that you got the money. You hand me the deed to the studio. That's a third party verifying a transaction between you and me. What these guys figured out over the blockchain using electricity and using a network of computers is they could have this fully distributed ledger, this fully distributed spreadsheet that can verify these transactions, sanctify these transactions without a third party. Okay, so a third party, we say that's trusted, but the blockchain is truth. Okay, it's just truth. Okay, the Medicis once in a while when they took over the double ledger accounting, once in a while they'd say, Andrew, you wrote in that accounting book 100, but Anthony wrote 200, and I'm the verifier. I wrote 200. Pay Anthony 200. Right? That's trust. Verification and truth is Andrew put up 100. Anthony said it was 100. They crossed the value over the blockchain, fully transparent, fully distributed, and therefore it is completely sanctified. So this is an incredible technology once you understand it. And I'll start with the fact that we spend $7 trillion a year globally in financial services and banking. So we're verifying our transactions with each other using banks. They charge us fees for that. And we spend globally $7 trillion. Imagine we went to a system where we didn't have to spend that money anymore. We could just go from your wallet into my wallet, verified by the blockchain, and then a result of which we don't have to spend the $7 trillion anymore. I'll give you two examples very quickly, and then we can talk about Bitcoin if you want. So example number one is I own a restaurant called the Hunt and Fish Club. 85-90% of the bills in the Hunt and Fish Club are paid by credit card. The credit card vendors charge us anywhere from 3 to 3.5% for these transactions. If we could do a wallet to wallet transfer, Andrew Brill walks into the restaurant, he has a bill, he turns to the waiter and he says, well, what's your wallet? I'm going to send you a US dollar, a stable coin to your wallet from my wallet. We can avoid the 3.5% charge from the credit card company. Now, these restaurants make about 15% gross margin. If we can save the 3.5%, that's a 25% increase in the gross margins of the restaurant. We can put that into food, we can put that into service, higher quality decor. And I'm just telling you, there's a day coming where the $7 trillion is going to be replaced by the blockchain. And I know you believe me because we're doing this right now costless. We're having this phone call and we have this video hookup like the Jetsons, and it's not costing us any money because we paid a monthly charge for the pipe to run this thing through. I'm older than you, and you may remember this. I'm pretty sure you might. If you were in Europe in the mid 80s, it was $5 a minute to call mom and dad. You had to go to the post office in Rome. They'd give you a card. You'd go into the little booth. You call the AT&T operator, and they would click off the phone after 5 minutes, and you'd spend $25 making that call. Today, you can go to any cafe in Rome, hook into their Wi-Fi, call mom and dad, voice over IP, no dollars. So the world is going to change again as it relates to transactions. And so, but that requires scaling, that requires building the network. And so I wrote down in my diary, I said, okay, if Bitcoin gets to 100 million wallets, I mean, there's 100 million people on earth that are using Bitcoin, I'm going to make my first investment. If I'm comfortable with the regulation in the United States, I'm going to make my first investment. And then lastly, if I'm going to buy it for clients and therefore I'm going to spend 9 figures on Bitcoin, I have to store these codes. I have to store these coins someplace on a computer that's safe, that's in cold storage, that's protected somewhere. And so when that started happening in late 2020, I made my first purchases of Bitcoin October, November of 2020. And then I went out and told my clients that we own Bitcoin for them. Some of them said, I'm firing you. You're crazy. Some of them said, what the hell is Bitcoin? And some of them said, that's interesting. I'd like to learn more. Nobody was happy, by the way. And I mean, nobody. And so I wrote that little book. It's a tiny pamphlet. It's maybe 100 pages to send to my clients. So I say, okay, listen, this is all the research that I did from 2017 when I got fired from the White House to today. And I'm going to put it in a pamphlet. Please read it. And oh, by the way, the white paper that Satoshi Nakamoto wrote is a very simplistic thing. Some of the biggest ideas, we both know this, some of the biggest ideas are the simplest. So if you read the book and read the white paper and you want to learn more, okay, come sit with me. We'll tell you more. Now, I can say, and this is my last thing, I'm sorry I'm being so long-winded, but if you do the research on Bitcoin and you do the research on blockchain, you go towards Bitcoin and you go towards the blockchain. I have yet to meet an intellectual, a smart securities analyst, someone that I spent the time and energy to understand it. This is, oh, okay, that sucks. Let me put out a tweet like Anthony did in 2012. Bitcoin is nonsense, caveat emptor. I don't know anybody. Paul Tudor Jones, legendary billionaire investor, owns Bitcoin. Stanley Druckenmiller, he broke the British pound 1992, legendary billionaire investor, he owns Bitcoin. Larry Fink told me in a hotel lobby in 2022, I don't like Bitcoin. And I think you're a dummy to own it, or something like that. It was very derogatory. I said, Larry, you got to do the homework. Okay. He did the homework. To this man's credit, he's one of the smartest people in investment management. He has the largest asset management group in the world, definitely in the United States and possibly the world. I'm talking about retail and wholesale, institutional, $11 trillion under management. Disliked Bitcoin in 2022, filed for an ETF application in January of 2023 once he did the homework, once he understood it. And now he has the most successful ETF offering launch in the history of ETFs. The symbol is IBIT. And I'm very proud to tell people on Wealthy On that SkyBridge was the first money into that. So the young men that orange pilled, this is an expression we use in Bitcoin, where we orange pill somebody, it's from the Matrix, where you get them to believe what is actually happening and where the future lies. The young men at BlackRock that orange pilled Larry, they came to me and my partner Brett Messing and said, okay, listen, he's not going to do this unless we can get outside money. It's just the way he is. Would you guys be willing to help us start this trust? And we looked at him and said, yeah, absolutely. We sent them $10 million. They got the trust started. They applied for the ETF application. And this January, that ETF application got approved. And so now you were mentioning 43,000 to 71,000. What's happened is there's a tremendous amount of pent-up demand for Bitcoin. There's a very limited supply. And this took off in the last quarter. And I predict it's going to go higher. And we can talk about anything you want. And I'm sorry I'm so long-winded, but I just want to lay the base layer and the framework for people so they understand. I, too, was a skeptic. Michael Saylor, who owns $7 or $8 billion of Bitcoin now, was a skeptic. Larry Fink was a skeptic. And we all start out cynical and with great deals of skepticism. But I implore viewers and listeners to please learn about this and get off zero. Assume everything I'm saying is bunk and Bitcoin is worthless. That's okay. Put $5,000 in a Bitcoin. You write it off and say, okay, it's worthless. Because if we're right, we're right. Bitcoin will trade to the market capitalization of gold, which is about 10 to 12 times where it is today. Not going to happen overnight, but I'm talking over a decade. And if you're a long-term patient investor, you'll be well rewarded. Okay, now I'm bringing into the conversation something that will remind you of your wife, Andrew. Okay, ready? And obviously my wife. Here it comes. Yeah. Okay. My wife,
Should have listened to me.
my
Yes.
wife
Yes.
bought this for me, and it was a double entendre, obviously, because I should have listened to her on everything, but maybe some people should be listening to me on Bitcoin. Okay.
So, Anthony, you talked about the blockchain. Obviously, when I envision the blockchain, I almost look at it like a strand of DNA with different things plugged in. Explain to me what a block is. So, I go into the Hunt and Fish Club and I go to pay my bill with cryptocurrency.
Mhm.
That goes into when the bill goes in to the block, and then I have to say, okay, I'm going to pay that bill with this, so
Exactly.
that has to match,
Exactly.
and that block goes into the chain and is
Right.
secure.
Right. And now you have a cryptographic code. You have your Bitcoin represented by a 100 million Satoshis, right? So it's divisible by 100 million Satoshis. So maybe your meal costs a million of those Satoshis, $150 or something like that. So the restaurant says payable to us 1 million Satoshis, and Andrew Brill has that message now. He can send some of his Bitcoin, some of that code to the restaurant. Now, this is very, very important because each one of these codes, to your point about DNA, they have their own unique fingerprint. Once that code transfers, there's no ability to do what's called a double spend. And the best way I can explain that to you is if I wired you $100,000 from my bank account to pay for your studio, and then I said, oh, okay, let me go wire $100,000 from my bank account again to pay somebody else. The bank says, what are you doing? We already sent that money to Andrew Brill. We can't send another thing, right? So that's called a double spend. So with double entry accounting, something that was invented about 1,000 years ago, we're able to keep track of things. Put things very simplistically, your bank is a spreadsheet. Your bank is a database. It's got Andrew's account, it's got Anthony's account, it's got Wealthion's account. And when we want to move things between these accounts, we go to that bank and we ask them to do it for us because we trust that bank. That bank's regulated. There's very smart people in that bank. There's controllers in the bank. The government comes in there to make sure that the bank is doing it honestly. And a result of which we trust that bank. But now we have this technology that will do all of that work for us. It's the voice over IP. We used to call, Ma Bell, AT&T to make that phone call. But now we have all these pipes and plumbings for the internet. This is how you have to think about the blockchain.
So I had the money, the cryptocurrency could be Bitcoin. Right now, one Bitcoin is, let's say, $70,000, or is it 70,000? That's split up in my wallet. I can actually use just a portion of that
Yeah, you could
to
use
pay that bill.
you could use one Satoshi.
Okay, so those are actually, it's almost like having a dollar that's split into four quarters or
Yeah,
20 nickels.
100%.
Okay,
Or if I told you here's a $1,000 bill, you bring it to the bank, they can chop it up into pennies, right? So
gotcha.
Satoshis are like the pennies of Bitcoin.
And is this going to eventually live on our cell phones? Like, you talk about the wallet. I carry cash in my wallet.
Yeah.
Sometimes, I do have kids, so there isn't much in there, but I have a wallet that's in my pocket. This isn't going to be a wallet that's in my pocket. How does the wallet work
Yeah.
when
So
it comes to
so
Bitcoin?
it's a good question. It's funny because we call it email, and we always have this little envelope which dates back to the past when we sent mail to each other, right? But it's an electronic transmission of data and communication. And so now you and I have a leather wallet. Our grandkids will have no leather wallet because they won't need one, right? It'll all be digitized somewhere, and it'll likely be on a smartphone. And, there'll be money on the smartphone, but there'll be small amounts of money in my prediction on a smartphone because you don't want to get SIM swapped. You don't want somebody to come to the phone, hit your phone, and take the data and then take your money. It would be the same way if they bum rushed you on the street and they pulled your wallet out of your back pocket and took your money. So there'll always be small amounts of money on the wallet inside the phone. But yes, you'll have money on your phone. It'll be likely be a stable coin. Okay. And the stable coin, if you're in the UK, it'll be a stable coin tied to the British pound. Or if you're in the United States, it'll be a stable coin tied to the US dollar. And you'll go into stores and you'll pay, and you'll have Bitcoin, maybe you'll have other cryptocurrencies in your wallet. And you'll say, okay, this man wants US dollar. He doesn't want Bitcoin. Let me convert my Bitcoin into the stable coin. Let me send him the stable coin. And again, the stable coin would just, again, be on the blockchain. It's a different blockchain than the Bitcoin. Same technology, same process of verification, fully distributed ledger, fully distributed spreadsheet. And so this is what tricks people. People say, that's just financial blather. That's just accounting blather. Why would that be worth anything? Well, then you have to examine what money actually is. And I always recommend to people that they read The Ascent of Money, which was written by Professor Neil Ferguson. You could also watch the BBC documentary that Neil did. And he takes you back thousands of years to explain what money is in a society. And ultimately, money is a technology. We use this technology, Andrew, to transfer value between ourselves. We don't want to barter anymore. I don't go to the farmer's square with my pigs and try to trade them for cows. I don't do that anymore. I don't walk into the bar and say, here's a calf from my farm. That's your veal cutlet parmesan for the next 6 weeks. Give me 17 gin and tonics. We don't do that. We have a script of paper, or it's actually made out of cloth, or maybe we had a piece of wampum, a shiny seashell, or we had a gold coin with a Roman emperor's face stamped on it. And we said, okay, we are going to trust that. That's a piece of value. That's worth something to each of us. If you give me this, I will give you what you want for it because I know the thing that you just gave me, I'm able to give to somebody else for what I want for it. Right? And so definitionally, that's money, right? Definitionally, we can call that currency. Although people have different definitions for money and currency, I like to keep it simple and say they're roughly the same thing. And so now I'll submit to you, and I want you to think about this. If I have a $100 bill in my hand, it's made out of, if you Google what it's made out of 75% cotton, 25% linen. And here's my $100 bill, and it's this big. What is it worth? Well, if you and I were in undergraduate philosophy class, it's worth nothing. It's just a piece of cloth that's got some green on it and an anti-counterfeit strip and maybe a president or Ben Franklin on it. It's not worth anything. Yet, you and I both know it is worth something. If I give it to the maitre d', or I give it to the valet, or I give it to the salon, they're happy because they know they can take that slip and they can give it to somebody else for value. And once you understand exactly what I just said, well, now you have this property. You have digital property on the internet that people are accepting as value. And then it meets all the checklists in Professor Ferguson's book. It's immutable. It's scarce. It's unbreakable. Nobody can corrupt it. One of the problems with our money, Andrew, and you and I both know this, is that we trust the government to give us the money, but the government makes more money. The US dollar has lost 22% of its value since January of 2020. Okay, I just want to repeat that because we have people on this show that are listening. They are maybe middle class. Maybe they use their time and their energy to make money for themselves. Well, if they got paid $1,000 In 2020, they only have $780 of purchasing power today. You see that? And this is what the governments have done for centuries, thousands of years. They put, iron ore and then they coated it with silver or coated it with gold. They put less valuable metals in the currency, or they made more on the printing press, or they made more wampum. Okay. And they inflate the money. Well, Bitcoin can't be inflated. It has a fixed supply, and there'll be never any other Bitcoins made ever again. And so when you start to understand that it has all of the DNA and all of the properties of what man and womankind have used to transfer value between each other, and you now understand that it's on a technological platform that the world has embraced, known as the internet, you can see where we're going. And you can also see how this could be a store of value, very similar to the way we deem gold to be a store of value. I can't eat gold. I can't, if I'm using it for manufacturing or something, yes, but that's only 5% of the value of it. We have decided in our civilization over 5,000 years that gold is a store of value. And I like gold as an investment. And I always tell people, go to GBI, buy some gold and have it in an account. And because it's a very good store of value, and gold is at an all-time high. But I also like Bitcoin. So I'm not, I've had Peter Schiff on Speak Up. He's a gold guy. He hates Bitcoin. I'm not that. I like gold and I like Bitcoin. I think Bitcoin is a form of digital gold. And in some ways, our children, people that are 25 to 35 years younger than us, will probably choose Bitcoin over gold because it's easier to move around. I can't take $200 million of gold and put it in my pocket, but I can take a $200 million USB of codes of Bitcoin, and I can put that in my pocket. You see what I'm saying?
Yeah. So, Anthony? What do you say to the people? And I know it has to do with public keys and private keys. What do you say to people who are so worried about security and being hacked, and worried that, look, and it happened early on when they weren't being careful and someone did something silly and someone went bankrupt. They lost $460 million. But what do you say to the people who are so worried about cybersecurity that they're like, I'm not going near this because it's dangerous?
Okay. So I was there. And so everything you just said, I said from 2012 when I learned about Bitcoin to 2020. So I had an 8-year struggle to get myself off of zero. But I would tell those people today, you can store it at Fidelity. Today, you can buy it at something called New York Digital Investment Group. You can get a Coinbase account. If you don't like any of those things and you're a traditional investor, let's say you're a baby boomer like me, well, you can buy Larry Fink's or Kathy Wood's, or you pick Mike Novogratz's ETF. And what is that? Well, you can go call your broker. Hello, how are you? Yep, I'd like to buy Bitcoin. The stock symbol for BlackRock's Bitcoin ETF is IBIT, IBIT. They say, okay, great. They buy it for you. And you have now that QSIP number in your account, very traditional. So if you bought Apple stock, it's in your account. If you bought Google, it's in your account. Now you own shares of this ETF, this exchange traded fund, whose underlying asset is Bitcoin. You can also do that with gold. You can buy GLD. And so what I would tell people, that stuff is in cold storage. It's backed by the company that is storing it for you. They have layers of insurance on it. Lloyd's of London insures a lot of the stuff. They have multiple backup servers to protect you in the event of a calamity. If we get a New York earthquake larger than 4.8 on the Richter scale, and it's there to protect you and make you safe. And so you can buy it that way. And I would tell people, get off zero. Don't make the mistake that I made, waiting 8 years to get off zero. Get off zero, own a little bit. You don't have to put your life savings in it or anything like that, but this is going to be part of our future. And I will say this, that there will come a day where consultants, and there will come a day where tactical asset allocation managers for pension funds will say, my God, I've got to have a 1, 2, 3% position in Bitcoin. If I don't do that, I'll be underinvested relative to my peer groups. Okay. And once that happens, you'll see a very big explosion and very big proliferation of value. And I want my clients to get there before those people. And that's why I'm recommending it. So that's Bitcoin. There are other things on the blockchain. There's a gentleman by the name of Vitalik Buterin. He invented something called Ethereum. He changed the software code, and he made it possible so that you could add what's known as a smart contract on top of the base layer. All right. And so what's the base layer of the software operating system? It's Ethereum. We call that a layer one. We can then add something on top of that. We call that a layer two. We could add a insurance contract. We could add a token to buy and sell real estate. We could add I just bought a Ethereum based token that gives me title to the Basquiat self-portrait of himself and Andrew Warhol. And Basquiat made this portrait in 1982. It sold at auction for $32 million. One of my clients and a very close friend, Henry Chang, who lives in Hong Kong, he owns the Rosewood Hotels. He owns the Baha Mar Resort. He's been an investor of ours forever. He wanted to tokenize this piece of art. And so I bought over the blockchain, okay, which entitles me. It's now in my wallet. I own it. And it entitles me to a certain percentage of that piece of art. If he decides, and he says he's going to do this, he's 70. When he turns 75, he's going to put that art back up for auction. And Basquiat and Warhol are both very popular figures in the contemporary art, modern art world. And when he does sell that, there'll be cash replacing the piece of art, and then I can convert my token into that cash, and maybe I convert it into Bitcoin, or maybe I convert it into something else. So this is now going to start to happen, where we tokenize what's called real world assets, RWAs. And so things like Ethereum and things like Solana are also on the blockchain. They have been invented to help us process those transactions. And I predict, and don't go by me, because Larry Fink is a lot smarter than me. Larry Fink says this, and I predict he will be right. He says we are going to tokenize everything. So you're going to buy your stocks and bonds over the blockchain. Right now, you buy your stocks and bonds, and there are 7 different entities that they go through before they end up in your account. But over the blockchain, you can go peer to peer, just like I described other transfers of value. Here's a tokenized version of Disney stock. I put it up for sale. You agree to buy it. It transacts over the blockchain. Right now, when I joined the illustrious Wall Street, to buy a stock, we called it T plus 5. So if I bought the stock on a Monday, it took 5 trading days for that stock to eventually enter my account. And we went to T plus 3, 2, and now we're at T plus 1. But what the blockchain can do is, if we move to a blockchain standard for these transactions, it would be T plus 0. Okay, on something like Solana, it could take an hour, 45 minutes to transfer. And that's coming as well. So you have Bitcoin, then you have other blockchains, you have something called stable coins. Okay, my friend Jeremy Allaire runs something called Circle. He has a regulated stable coin where you can put US dollars up on the blockchain. He'll give you these stable coins. He's got it backed by tons of treasuries and tons of assets. So it's one-to-one backing. And now you have that, and you can use that on the blockchain to transact.
So you said something earlier about Bitcoin and tokens like that, or things like that, being backed by either the US dollar or the pound or the euro. Is that going to be the case, or will eventually Bitcoin and those things become their own currency?
So it's a great question. So the only thing I'm willing to say to you on that is I don't know. I can speculate with you though, and I can say Bitcoin to me is digital property. It's property on the internet. Could Bitcoin eventually become the standard where we treat it as the global currency? And we say, okay, these other currencies, these central banks unfortunately crushed all these other currencies. The US dollar is down 99% in value since we took it off the gold standard in 1971. And so we don't trust these things anymore. And so now we're just going to trust the Bitcoin standard. There are people that believe that. And there is a great book called The Bitcoin Standard by Safadeh and Amos. But I'm not there yet. I'm just saying that Bitcoin is a store of value. It'll be like gold, and gold's at a $16 trillion market capitalization. Bitcoin's at a 1.4 trillion, and I believe it could go up 10 to 12 times from here over the next 10 to 15 years. A result of which I'm recommending to people that they buy some.
You had said something earlier about, and we'll get into the halving. There's only a certain amount of Bitcoin to go around. And I know that when you got into Bitcoin, you were kind of watching Metcalfe's law and saying, oh, if enough people are using it, it might be worth something. And so you hopped in. Now, what happens? And in the book, you say it could go to 1 billion users by 2025, and we're fast approaching
Yeah.
2025.
Mm-hmm.
Is there enough Bitcoin to go around, or is that just going to drive the price up?
Yeah, so there is enough Bitcoin to go around because remember, it's divisible by Satoshis, 100 million Satoshis. So there's, I don't know, 21 billion. Hopefully, I'm doing the math right, Satoshis. But yes, there's enough Bitcoin to go around, but it will drive the price up. The price will start to inflate because it will be, in large demand. So we're heading towards mid 24. And we have about 350 to 400 million users right now. We do think that will double by mid 25. And then if I'm right about that, by the end of 2025, you'll have approximately 1 billion users. And so to frame this for you and viewers and listeners, go back to Web 1. We have about 5 or 6% adoption globally of Bitcoin. And that would put the web back to 1998, 1999. And we have 3 or 4 billion people now on the web. I think it's greater than half of the global population, but don't quote me. But I'm just saying we've got 300 or 400 million people today. That's about 4, 5, 6% of the global population. We have a huge opportunity here as this scales and adopts, and it will be used. It will be used. Okay, and I submit this to you. We can't predict the future, Andrew, but we can observe the past. And so just imagine you're sitting at your fat boxed computer in 1998, and you have a dial-up modem underneath your desk, and it's whirring and burring and catching a dial tone, and it's going to now log into the internet. And then it takes 35 seconds for your AOL landing page to arrive, and you can use it for email. You may want to go to a website known as eBay to buy a Pez gun, or you may want to go to Amazon to buy a book. Okay, but that's sort of where this is, right? And it's clunky, and there's people writing about it saying, the internet is a fad. But what if I beamed in 25 years later and I said, oh, by the way, we're going to be using this on thin screen computers. We're going to have these smartphones we hold in our hands that have more technology than what landed people on the moon in the 1970s. And oh, by the way, we're going to do trillions and trillions of dollars of transactions on this thing known as the internet. And there'll be billions and billions of people downloading 4K or now 8K video on the internet. And, people will be delivering things to your house, something called DoorDash. You'll be sharing rides around urban areas called Uber. And there will be this explosion of social media. All these things are going to happen in the ensuing 25 years, and trillions and trillions of dollars of wealth is going to be created. That's where we are right now on what we're calling Web3. That's where we are right now on what we're calling the blockchain technology. And believe it or not, back in 1998, there were skeptics, and people said, this is a bunch of bunk. I'm not buying Amazon. It's a high price bookseller. This is a bunch of bunk. I'm not going to buy eBay. I have no interest in Google. Okay. And they miss these technologies and they miss this growth. So I'm trying to tell people, okay, you may have missed that. Don't miss this. And again, you don't have to buy a lot of it, but get off zero, buy some of it.
Right. So talk to me, Anthony, about I know we're running up against time, but about the halving. Everybody's like, oh my God, my wallet's going to be cut in half. And no, that's not actually the case. It has nothing to do with what you already own. It just has to do with what's coming up in the future.
Yeah, lots of information about the halvings. I'm glad that you brought it up. So what if you read the white paper? And again, I believe it was a group of computer programmers that developed this together. They named it Satoshi Nakamoto, but I believe it was a group of people. But if you read the white paper, what they said is we're going to have this nodal system, and these nodes are going to verify the transactions that are taking place. And I think there's about 100,000+ nodes now. You can have your own node. You can go on to bitcoin.org and download their software, and then you could have your computer helping the system keep and verify these transactions. And so, in order to incentivize people to do that, and Nakamoto says, this may catch on. You may want to buy some. This may catch on. And he said, but in order to incentivize people to be on the system to help us verify all of these transactions, every day we're going to give out some Bitcoin. And so we have 21 million coins. They released a huge amount of them in the beginning. I can't exactly remember at this moment what it was. And then they said, when we get to a certain level of blocks transacted, we'll cut that amount in half. And so we're going to reduce the supply of Bitcoin that comes into the network roughly every 4 years. And so 4 years ago, there were 1,800 coins coming into the network per day. And those coins were at lower prices, $1,000 a coin, $2,000 a coin. But what the Nakamoto programmers felt was going to happen is if the coin went up in value, well, they wouldn't have to put out as many coins, right? You have to put out less coins at 71,000 than you do at 1,000. And so they predicted that what would happen is as these halvings took place, there'd be less supply in the marketplace. And because there would be increased exponential people on the network, there'd be way more demand and less supply coming into the marketplace. So when somebody says a halving, it doesn't mean that the supply is being cut in half, meaning there's 21 million coins. There's probably 1.5 million or so coins left to be mined. But what it does mean is that the network will spit out less coins per day. And so starting sometime in mid to late April, probably in the next 10 or so days, we're going to cut, the network is going to cut the supply of Bitcoin from 900 coins a day to 450. And that's meaningful because you have a ton of people that are buying the BlackRock ETF, buying Cathie Wood's ETF, and there's probably several thousand coins of demand, but there's only 450 coins being produced by the network per day. And so that has a tendency to typically push the price up. But what happens? It's a market. And so what typically happens is the halving happens and the price goes down. You say, well, why did that happen? Well, there's a lot of people that were waiting for the halving. They've decided that they made some money in Bitcoin. They're not long-term holders. They're going to get out of Bitcoin. And there's a new wave of people that come into Bitcoin. And then there's people like me never selling my Bitcoin. And so I don't care if it goes down. I'm going to sit and hold it. And then it builds itself back up. And that's happened over the last 14 years of Bitcoin. It is the best performing asset that we know about in the world, okay, from the day of its inception.
Yep, and that's evident by what Raul Paul told you, and
Yeah.
that's it's all here in the Sweet Life of Bitcoin appendix. One of the appendixes in here is the Satoshi Nakamoto white paper. So if you want to read it, the Sweet Life of Bitcoin, the Sweet Life with Bitcoin, sorry,
Yeah.
and written by you. And Anthony, I appreciate your time, and I hope that a lot of our viewers got a better taste of what Bitcoin and cryptocurrency is all about, how it's used, and not to be so afraid of it, and jump in. Maybe you'll make a couple bucks.
Well, yeah,
Hopefully, that's what it's all about, right?
just telling people get off zero. You have to put your life savings in it. Don't think of it as a lottery ticket. It is volatile. Be wary, but get off zero and join this revolution. And I always say to people, you buy a little bit of Bitcoin, you start focusing on the technical properties of it, and you'll be excited that you did.
Anthony, thanks so much for joining me. I know you got another interview coming up shortly, and I appreciate your time. Thank
All
you.
right, good to be here, Andrew. Thank you.
That's a wrap on another discussion here on Wealthion. Thank you for joining us. If you need help being financially resilient, please head over to wealthion.com and sign up for a free, no obligation consultation from one of our vetted, registered investment advisors. And remember to follow us on social media for the latest news and information to help you invest wisely. And if you could like, subscribe, and don't forget to hit the bell so you can be notified when new videos are released. Thank you for watching, and until next time, stay informed, stay empowered, and may your investments flourish.